Hi everyone, very good morning and welcome back to Grade B. So today we'll be continuing our session from start of the venture capital schemes, right? We have done in our last session in venture capital undertakings, venture capital schemes, and there are a few more points left in it. So let's start with that and we'll see so many other things that we have to cover. So let's start. Number one is borrowing. So whenever you are launching venture capital scheme, how much you can borrow, right? How much consent you need. So whenever you are launching a venture capital scheme, a fund management entity is launching a venture capital scheme, it may borrow funds. It may borrow funds. The maximum leverage by the scheme, it shall be disclosed in the placement memorandum. Maximum leverage means how much amount you are borrowing compared to the equity. The equity that you have compared to the maximum leverage, the maximum borrowing is called as a maximum leverage. So whatever borrowing you are doing, you have to disclose it. Apart from that, the leverage shall be exercised in accordance with the disclosures in placement memorandum, and if there is any deviation, suppose you are borrowing more, obviously lesser borrowing will not lead to any consequences, but if you are borrowing more, in that particular case you need the consent of at least 2/3 of investor by value. Now whenever I am saying by value, it does mean suppose there are 100 investors. For example, there are 100 investors and the total value invested by them is 1000 crores. So I am saying 2/3 of 1000 crores. Now if 2/3 of 1000 crores is with the 40 people, that will be considered as 2/3, right? Fine. So we will not have to calculate it by number. We will have to calculate by the value. Now valuation, obviously whatever assets you are having, you have securities, and for that you have to get your valuation done. Right. So this is the concept for that. The assets of the scheme may be valued by an independent third party provider, a valuer, etc. Computation of net assets value. So FME shall compute the NAV of each venture capital scheme at least on annual basis. Net assets, obviously you are doing the valuation, you want to know that what is the valuation of assets you are having, right? Valuation of assets divided by the units that you have sold. So net assets, your NAV, yeah, that you will have to find. Next is contribution by the FME in the scheme. You have taken the money from the investors, but what about your investment? Are you going to invest anything in the scheme as a fund management entity? So yes, FME shall ensure that under a venture capital scheme, you have started this particular scheme by taking the money from the investors, but you also have to invest. So how? At least 2.5% of the corpus. We have seen the minimum and maximum limit of corpus. Please remember that at least 2.5% of the corpus and not exceeding 10% of the corpus where the targeted corpus is less than the $30 million. So agar aapka targeted corpus, that means the funding that you aim to collect into this venture capital fund, venture capital scheme, if it is less than $30 million, in that particular case, minimum 2.5% of corpus and maximum 10% of the corpus. And now what if the corpus is more than $30 million? So if in case it is more than $30 million, then at least 7,50,000 US dollars. This is the minimum that you have to invest as a fund management entity in the venture capital fund, not exceeding 10% of the target corpus, right? So the maximum limit remains the same, 10% multiplied by the corpus, but minimum limit, there it was 2.5%, here it is 7,50,000 US dollars. Okay. Now the said contribution in proportion to the investor's investment, it shall be made by the fund management entity, its associate entity within 45 days and maintained on ongoing basis. The said contribution, if it is brought by the fund management entity, it shall be included for the purpose of net worth requirement, right? Net worth requirements may we have seen, right? For authorized FME, for retail FME, for non-retail FME, there were the net worth requirements, 75,000 US dollars, 10 lakh US dollars, etc., etc. So you know, if you are bringing the contributions in venture capital schemes, it will be counted in your net worth also. That means हम इसको मान लेंगे, आपकी net worth में जोड़ देंगे, ठीक? Now you can be the fund management entity can get exempted from the contribution when at least 2/3 of the investors by value permits waiver of such contribution. It we can allow you not to invest in the scheme if two-thirds of the investors in value, if they permit such waiver, at least two-thirds of the investors in the scheme are accredited investors, or scheme is a fund of fund scheme investing in a scheme which has similar such requirements. So in all such cases, we are going to permit you a waiver. You do not need to bring the contribution. Okay? Now let's understand about the restricted schemes. What are the restricted schemes? Fine. So restricted schemes means non-retail scheme. Obviously, because we are not giving this scheme to everyone. There is a limitation on the investors who can invest into such kind of schemes. So restricted schemes, non-retail schemes. See, these kinds of schemes may be launched by a registered FME, investing in startups, early stage ventures, right? Social medium enterprises, your small medium enterprises, infrastructure and other sectors where government wants that you should invest. So what are the desirable funds of this? So your restricted schemes can be in form of SME funds, social venture funds, infrastructure funds. Restricted scheme is the nature of scheme. What purpose it is going to used for, it can be different purposes, right? Why we call it as a restricted scheme? Because there is a restriction on the number of investors. Why these names are written? They depicts that for what purpose this scheme is made for, right? So like ESG funds, special situation funds, schemes which are falling under this category, they will be a closed-ended schemes and they will be filed with the authority under the category 1 AIF. Fine. Till the time you will watch this video, I would have made the AIF related video as well. So please do not forget to watch that particular video also for better understanding. Okay. Now next is investment for undertaking diverse or complex trading strategies like investing in listed, unlisted derivatives, or for permitted investments under the longevity finance. The schemes under this clause, they shall be filed with the authority under the category 3 alternative investment funds. If you are investing into the derivatives, that will come under the category 3 AIF, and investments which does not fall in the A and B above, they will fall under the category 3 investment funds. Now this was not more that important, but this is more important for us. Eligible fund management entity and filing of the placement memorandum. You already understand what a placement memorandum is. Fine. So a registered FME may launch the restricted schemes through a private placement by filing the placement memorandum with the authority before 21 working days of the launch of scheme. Now you guys have to, whenever this particular points come, please check. When I was teaching you, what did I tell? Registered FME, two types it can be, right? It can be your retail one, it can be non-retail one. So which one is allowed to do, which one is allowed to start the restricted scheme? I have told it that point over there itself, so you can go and just check it once and come again. You have to tell me that registered FME only retail wali is allowed for issuing restricted schemes, or non-retail one is also allowed to issue restricted schemes. This is my question. Okay. Now given the validity of placement of memorandum for launch of scheme, it shall be 6 months from the date of filing with the authority. That means if you want to launch the schemes, please launch within 6 months. Once you have filed the placement memorandum with the authority, after that we are giving you 6 months. You have to start your schemes within those 6 months only. Now what are eligible investors? Restricted schemes shall have less than 1000 investors or such number as may be specified by the authority. I told you why we are calling them as a restricted scheme, because there is a restriction on the number of investors. So restricted schemes, they shall have a number lesser than 1000 investors, right? Accredited investors or investors investing above 1,50,000 US dollars, they may invest in such particular schemes. Above there was a venture capital scheme. In that we have seen that who can invest in venture capital, less than 50 investors were there, as well as investors who are investing US dollar 2,50,000, they were allowed. But this is different in case of your restricted schemes. Okay. Now for the employees, directors and designated partners, the limit is US dollar 40,000. What is the nature and structure of this particular scheme? So Restricted schemes, they may be launched as open-ended or closed-ended scheme. Fine. If this is a closed-ended scheme, then the minimum tenure it is going to be 1 year. Now what you can do is, if you want to remember, you should compare the given provisions over here with the provisions which were given in the venture capital scheme. ठीक है? Next is extension of tenure of close-ended scheme. If you want to extend the tenure, it may be permitted up to 2 years subject to the approval of 2/3 of the investor by value of their investments in the restricted scheme. We can allow you for the increasing the time limit of the close-ended scheme. See, restricted scheme can be both open-ended and close-ended. What is this open-ended and close-ended? It means if the maturity period is predetermined, it is called as close-ended, right? And if maturity period is not predetermined, is called as the open-ended. ठीक है? Close-ended में you can increase the maturity, but you need the what you can say approval of 2/3 of investors by value. Now next is, what are the permissible investment? You are taking the money from the investors for investing in the restricted scheme. So where you are going to invest it? Obviously, same things with a little bit difference. Unlisted entities, security listed or to be listed on foreign jurisdiction, India, etc. Money market instruments, debt securities, securitized debt instruments, right? Derivatives like commodity derivatives, etc. Units of mutual fund and alternative investment funds. Investment in the LLP. So these are all your permissible investment where you can invest. Now, in addition to the above, in a close-ended scheme, they may invest 20% of the corpus in other physical assets as well, like real estate, bullion, art, or any other physical asset as may be needed. So, up to 20% they can invest in such kind of assets as well. But in which kind of scheme? A close-ended restricted scheme only. Fine. Now there are some investment restrictions. Let's just see them one by one. Number one is, in case of an open-ended scheme. अगर आपकी scheme एक open-ended scheme है, then maximum investment in the securities of unlisted company should not exceed 25% of the corpus. Whatever your total funds are, not more than 25% you should invest in the unlisted company's securities. Remember it. Minimum size of restricted scheme should be $5 million, and restricted schemes may invest in the associates. Fine. Associates में भी invest कर सकते हैं. कौन होते हैं associates? When one company is having more than 20% of the share capital in another company, they are called as the other company is called as associate. जिसमें 20% shareholding है, वो company क्या कहलाती है? Associate. ठीक? Now, restricted schemes, they may invest in its associates subject to prior approval of 75% investors in the scheme by value. What do we are saying? We are saying that a restricted scheme, they can invest in the associate, but they need to have a prior approval from the investors. That is of utmost importance. If 75% of the investors say yes, then you can obviously go and invest into your associates. Now, the same things about the borrowings. Maximum leverage you have to indicate in your placement memorandum. Fine. The leverage, if there is any deviation in the borrowing, if you are borrowing more. Now, many people could get confused in leverage. So, I have told you leverage means your own funds compared with the borrowed funds, right? How much you are borrowing from outside on which you have to pay fixed interest rates compared to what you have in your own pocket. Correct? That is called as borrowing. Sorry, that is called as leverage. So leverage, they shall be exercised in accordance with the disclosure, right? Any deviation, they shall be subject of the consent of 2/3 of investors by value. Now, NAV computation has already been told. It should be done at least on monthly basis, as well as, see, they shall compute this at least on monthly basis, and given that in case of close-ended scheme, it should be computed at least half-yearly basis. If it is an open-ended scheme, compute monthly basis. If it is a close-ended scheme, compute on a half-yearly basis. Next is contribution by the FME in the scheme. read this particular thing in venture capital fund also. So in case of a close-ended scheme, at least 2.5% of the targeted corpus and not exceeding 10% of the corpus where the corpus is less than $30 million. If your corpus is more than 30 million US dollars, then at least 7,50,000 US dollars and not exceeding 10%. Minimum and maximum, both the limits are given. See, whenever an FME, that is a fund management entity, they are opening an investment scheme, they are taking money from the investors. Good, you are taking money from the investors, but you should also contribute something. So this is that contribution, that what can be your maximum and minimum contribution being an FME. Okay? Now next is, if your scheme is an open-ended scheme, what are the provisions if your scheme is an open-ended scheme? So at least 5% of the targeted corpus and not less than 10% of the corpus in a scheme where the corpus is less than 30 million US dollars, right? So the minimum amount has been increased, and at least 15 lakh US dollars if your corpus is more than US dollar 30 million. So in an open-ended scheme, it has been increased. Why? Because the risk of investors also goes up. See, in a close-ended scheme, there is a fixed time. In a closed-ended scheme, there is a fixed time कि okay, in this time the funds are going to mature and we will give you back your amount. But that is not the case in the open-ended scheme. So the risk of investors goes for a toss. They have a higher amount of risk, and that is why the contribution of the FME has also been increased. Now we are going to see retail schemes. Fine. Let's start. So retail schemes, these are the schemes that shall be launched by the registered FMEs retail, right? Only these kinds of entities, they can launch the retail kind of schemes. For pooling money from all investors through an offer document in various permissible investment. No restrictions, right? There were restrictions on the number of investors, the value of investment in the venture capital scheme. There were restrictions on the number of investors as the value of investment in the restricted schemes, but there is no restriction. Now, who all are the eligible FMEs and the offer document? So no scheme shall be launched until you have filed a draft offer document with the authority at least 21 working days before the launch of scheme. Same thing we are reading again and again. Validity shall be 12 months. Now here the validity has been increased, right? Because you are going to offer a retail one, so we have increased the validity. It is going to be 12 months. Once you have filed the offer document, after that you have 12 months to launch your scheme. See, FME, they shall ensure that the authorities comments. See, authority sees your offer document. If authority finds that okay, these are the things that should be incorporated in the offer document, then you should. Fine, no retail scheme can be filed until it has been approved by the fiduciaries. Who are fiduciaries? See, so every fund management entity here, there should be fiduciaries as well. Fiduciaries are the officials, they are the persons who work in different capacities, like they can be a trustee, they can be an investment advisor, etc., etc. But why the fiduciaries have been given a separate role over here? Because you can understand, suppose they play a role of trustee, right? So they always take decisions where investors' interests are protected. Okay? So a fiduciary is an official who looks that investors' interests are protected in every scheme or not. So this is the role of fiduciary. Now you need not to go into that much detail because fiduciary is a total concept in its own. So we will not be going into that much detail because we really have a lot to study, a lot. Okay? So for all those who have got an inquisitive mind, who have got a questioning mind, I would tell them that please restrict yourself to the things which are given directly, because आपको directly ही इतना सारा पढ़ना पड़ जाएगा. ठीक है? There are so many things that you have to read directly, so please limit your things. Now, minimum number of investors. Retail scheme shall have at least 20 investors. Now you see, in the other schemes they provided us the maximum limit कि maximum इतने investors हो सकते हैं, maximum this much these many investors can be there, but here they are providing us the minimum. They are saying that इतने तो होने ही चाहिए, these minimum investors should be there, with no single investor investing more than 25% in a scheme. We do not want that the scheme is dependent only just one investor. So no investor is going to invest more than 25% in the scheme. Fine. This condition shall be complied with a maximum period of 6 months from the closure of offer. Now next is the nature and structure of scheme. Let's understand this as well. So retail schemes, they could be open-ended or close-ended. Both kinds of options are there. In case of a close-ended schemes, the maximum tenure shall be decided upfront and disclosed in the offer document. Minimum tenure shall be 3 years. This is the minimum tenure. At least for 3 years, your close-ended scheme should be there. If you want to extend the close-ended scheme, obviously you have to take the permission of 2/3 of investors by the value. Retail schemes can be launched into various segments like social ventures, infrastructure, for ESG schemes. What is this ESG? We will come to know in just a bit. There is a separate provision onto that. Okay? Your environmental social governance schemes, specific sectors, certain schemes like infrastructure, equity schemes, debt schemes, etc., etc. These can be the things over here. Now, what are the permissible investors? If you have taken money from the investors, where you are going to invest such money? So, securities which are listed or to be listed or traded on foreign jurisdiction, unlisted entities, money market, debt securities, securitized debt instruments, derivatives, units of mutual funds, like that. Take. Now, investment restrictions and the scheme corpus. In case of an open-ended scheme, the maximum investment in an unlisted entity should not exceed 15%, right? So your maximum investment, if you are allowed to invest in an unlisted entity, there is no problem in that. Just wait for a second. So you are allowed to invest in an unlisted entity, but what you can invest is maximum 15% in an unlisted entity, not more than that. The minimum amount of investment by an investor in case of a closed-ended scheme investing more than 15% shall be $10,000. So even if it is a closed-ended scheme, you are investing more than 15%, but we have restricted your investment by value, not more than $10,000, right? Wait. Yeah. Now, in a closed-ended scheme, even if you are investing more than 15%, you cannot invest more than 50%, right? Whatever your total corpus fund is, you cannot invest more than 50% in the unlisted entities. Fine. After that, in the above, we have seen that for in a open-ended scheme, they are not allowed to invest more than 15%, right, of their fund size. So in those particular cases, this 10,000 limit will not be applicable. Okay? This 10,000 limit is only applicable in case of a closed-ended scheme. After that, the retail scheme, they shall not invest more than 10% of its asset under management in the securities of a single company. एक ही कंपनी में आप कॉन्सेंट्रेट नहीं करेंगे. Retail schemes, they shall not invest more than 25% of its AUM is asset under management. AUM is asset under management in a single sector. So sector means like banking sector, IT sector. Now in a banking sector, there are so many banks. In an IT sector, there are so many IT companies. So in one single company, you are not going to invest more than 10%, and in one single sector, you are not going to invest more than the 25%. In case of a financial service sector, the amount shall not exceed 50%. So financial services से related sector में आप 50% invest कर सकते हो. The minimum size of retail scheme is $5 million. The retail schemes, they shall not invest more than 25% in its associates. So associate company, not more than 25%, you cannot invest. Now please remember what was the limit. Whenever you are reading this particular line, you should know that What was the limit in case of restricted scheme? What was the limit in case of venture capital scheme? Fine. So whenever you are studying, do this particular cross checks always. Now next is the borrowing related thing. So a retail scheme shall not borrow to meet the temporary liquidity needs. The retail scheme shall not borrow more than 20% of the asset under management. So here the restriction is there. You cannot borrow more than the 20% of your asset under management. Contribution by the FME. What can be the contribution? So they shall ensure that FME or its associate that invest at least lower of 1% of asset under management or the US dollar 2 lakhs. US dollar 2 lakhs or 1% of asset under management, whichever is lower, that should be the minimum investment. Fine. After that, the said contribution, they shall be made by the FME or their associates within the 45 days. Now next is, we have seen venture capital scheme, we have seen restricted scheme, we have seen the retail schemes. Now there are special situation funds, right? Now this can be a little bit trickier, so I will explain this in easier language and you have to understand that as well. If you would like to know, then you can read all of this, but I would not suggest. See, what is special situation asset? See, our banking sector, they are suffering from the problem of NPA. NPA means such assets, NPA, non performing assets. Now a loan given by the bank is its asset, fine. Now they are not able to recover the interest or the EMI amount from this particular asset. So what they do is they sell this particular asset. Okay, we have seen the asset securitization company, asset management companies, right, like that. So they purchase these kinds of assets and then what they do, they try to recover the amount. Okay, so if you have run a scheme which is going to invest in such kind of securities, in such kind of assets, then that is called as a special situation fund. You see, what are the special situation assets? Special situation fund is going to invest in the special situation assets. Now what are these special situation assets? These are the stressed loan which are available for the acquisition as per the RBI directions, or they are approved under the insolvency and bankruptcy code. Security receipts which are issued by the asset reconstruction company. Asset reconstruction company क्या करती है? What is the work of asset reconstruction company? It takes the problematic assets from the bank, that means problematic loans from the bank, and try to recover it. Fine. सिक्योरिटीज ऑफ इन्वेस्टी कंपनी. इन्वेस्टी कंपनी मींस जिस कंपनी में आप इन्वेस्ट करने जा रहे हैं उस कंपनी की सिक्योरिटीज अगर आप ले रहे हैं, और वो कंपनी क्या है, व्हाट इज द पोजीशन ऑफ दैट कंपनी, whose stressed loans are available for acquisition, against whose borrowings security receipts have been issued by the ARC, whose borrowings are subject to the corporate insolvency and who have dissolved all the defaults related to the payment of interest, etc. Fine. And such payment defaults are continuing for a period of at least 90 days. So that means the situation of this company is very bad. Fine. This company is into a default mode. Fine. This company's assets are also not performing well, and if you are investing in such kind of company, then that will be called as a special situation asset. The crux of the matter is totally that you are investing in such assets, those are problematic, right? Now in such kind of assets, why one would like to invest? See, there are chances. First of all, they suppose if the face value of asset is 1 lakh, then you can get them at 20,000 or 30,000. So the cost is less and profits can be higher, but profits can be lower as well. So there is risk, a very high risk कि आप अच्छा profit भी कमा सकते हैं और ऐसा भी हो सकता है कि आपको कुछ ही ना मिले. So both kinds of things will be there. Okay. Now filing of placement memorandum, the same kinds of things. You have to file at least 21 working days before. Okay. Now for what time this is going to be valid? This is going to be valid for 6 months. Your placement memorandum. In the retail scheme, what we have seen, please remember it, the timing in the retail scheme. Now what is the nature and structure of the scheme? the special situation fund shall be close-ended. So what were the options available in the retail scheme? It could be close-ended as well as the open-ended. But here we are talking about only about close-ended. This shall be for a term of 3 years. Extension of tenure of close-ended special situation fund may be permitted up to 2 years, but you have to take the approval of 2/3 of investors. So many of the things are repetitive as well. You see, as we are reading this, many of the things are repetitive and you can do them very easily. A special situation fund shall be constituted in IFSC as a company, LLP or a trust under the applicable laws of India. Now, what are the permissible investments? You can only invest in the special situation assets. Special situation assets क्या होती हैं? Definition में we have already seen. So, permissible investment, you can only invest in special situation assets, and we have already seen that what are special situation assets. I hope it is clear. Scheme corpus, eligible investors, etc. These kind of funds shall have the minimum corpus as may be specified by the authority time to time. Nothing has been specified over. Now, special situation fund shall accept the eligible investors as specified by the authority from time to time. That means both the things will be specified by the authority, not yet specified, so we do not have to read about it. Clear? Now, next is the exchange traded funds. Wait. We'll start it in just 2 minutes. Yes. So now let's start and talk about the exchange traded funds. Okay. What is exchange traded funds? So one thing, one by one, we'll understand this. First of all, ETF is just like your mutual funds. Number one thing. In mutual funds, you invest in different kinds of securities, right? In the exchange traded funds also, this is also a fund, and in this also we invest in different kinds of securities. Number one thing. But what is the difference? Why ETFs are not called as mutual funds? The point is that they are listed on exchange. They are listed on exchange. Because they are listed on exchange, so every moment their prices can change, the NAV can change. But in mutual funds, they are not listed on exchange. Fine, they are not listed on exchange. Correct? And hence their value is calculated at the end of day. The net NAV there, that is calculated at the end of the day. Now, what is ETF? Let's understand this. So there are many indexes that are stock exchanges launch. Like one of them is Nifty 50. Now you all know that Nifty 50 is what? Nifty 50 consists of, this is an index, right? There are various kinds of such index Nifty can make, like Nifty is having a banking index, Nifty is having an IT index, okay? In that securities are invested in banking sector entities, IT sector entities, like that. Various kinds of indexes can be there. Now Nifty 50 top 50 companies in which this particular, for which securities has been purchased, right? Now I am an investor. Now Nifty 50 shows the health of economy, that how these 50 companies are performing, right? What is the valuation of their securities, etc., etc. I am an investor and I want that I also invest in such securities of these 50 companies, right? So now here comes the ETF to my rescue. ETF says that do not worry, we will invest in these 50 companies securities only. We are going to invest in these 50 companies securities only, as well as in the same proportion. जिस proportion में ये index बनाया गया है, the same proportion in which this index has been made, we are going to invest in the same proportion. मैंने कहा, oh wow, that is very nice. They said we are going to track this index. Fine. Your NAV, whatever it will be, this will be matched with that particular index. And this is how I can invest in such 50 companies with the help of exchange traded funds. Exchange traded means these are listed on exchange. and funds, those are investing in a similar to an index. Now this was Nifty 50 index. Apart from that, Nifty is also having an IT index. So if I want to invest in that particular index's security, then I will have to see that does ETF offers that, right? So I hope now you have understood this. Let's see this. So ETF, only registered FME retail, they can launch exchange traded funds by filing the draft of a document with the authority at least 21 days before. What is going to be the maturity? 12 months. Similar like your retail schemes. Now they shall mandatorily be listed. Obviously, exchange traded means what? You are listed on exchange. Fine. Everyone can purchase and sell your securities, and they will be including equity index based ETF. Those are investing in equity shares. Debt one, commodity based hybrid ETFs which are investing in two or more asset class, means combination of any one of them. Actively managed ETF and any other ETF which the authority may approve. Now what are these ETFs? These ETFs show that in which kind of asset they will be investing. Fine. And all such ETFs, they track an index, मतलब एक इंडेक्स को फॉलो करते हैं. They see that okay, in what kind of securities that index is possessing, we will be investing in those securities. In what proportion they have made that particular index, we will be investing in that same proportion, right? So no scheme with the ETF shall be filed unless it is approved by the fiduciary. Now talking about the equity index based ETF. So an FME may launch an ETF replicating an equity index of an IFSC or Indian or foreign jurisdiction. Equity index based ETF, it seeks to replicate a particular index. Replicating a particular index means it wants to be that index. Okay? Suppose Nifty 50. So I want to invest in those 50 companies. So ETF offers me that service. If ETF says we are going to invest in the same 50 companies in the same proportion, don't worry about it. Okay. So the index shall have minimum of 10 stocks. जिस भी इंडेक्स को आप कॉपी करने की कोशिश कर रहे हैं उसमें कम से कम 10 कंपनियों के तो स्टॉक होने चाहिए. For a sectoral index, no single stock shall have more than the 35% weight in the index. Sectoral index means like a banking index, like an IT index. Here I am trying to match a sector. ठीक है. So in that particular case, one company shall not have more than 35% of weight into that particular index. Very very important. For other sectoral indices, no single stock shall have more than the 25% weight. Fine. Wait for a second. Next is equity index which is based ETF. They shall replicate the underlying index to the extent of at least 95%. Means 95% of whatever the total assets are, you are going to match it. Next is debt index based ETF. Debt index based ETFs are what? So they are investing in debt kind of securities. They seek to replicate a particular index. They shall ensure that such index complies with the following norms. The index shall have a minimum 5 issuers. कम से कम 5 companies तो होनी चाहिए. No single issuer shall have more than 25% of weight. And how much they should replicate? At least 90% of the total assets they shall replicate. Fine. Just wait for a second. Now commodity oriented ETFs. Commodity oriented ETFs, see your there are so many commodities. They can be soft commodities, hard commodities like your oil, gold, silver, right, wheat, etc. All these are commodities. They are traded. So commodity based ETFs, they shall invest in at least 90% in the specified commodity or specific commodity related securities. Commodity related securities like derivatives. Fine. Either you invest in the commodity or in the commodity related security. For participation in this ETF, FME shall ensure that the key managerial personnel shall have a 5 years of experience. Now gold ETF, it is also a commodity but a specific ETF has been created for this because it is quite popular. Fine. In case of gold ETF, at least 90% of the assets under management shall be in the gold or bullion instruments, right? Given that exposures in such kind of instruments having gold and an underlying asset shall not exceed the 10% of the AUMs of the scheme. Next is commodity derivatives, right? Gold ETFs shall be benchmarked against the prices of spot gold on the recognized stock exchange. Physical gold will be stored with the authority. Next is silver ETF. In case of silver ETF, at least 90% of the asset under management shall be invested in the silver or bullion instruments. That is important, right? And with the underlying silver exchange traded commodity derivatives, and exposure to these commodity derivatives having silver as underlying asset shall not exceed 10%. You cannot invest in derivatives more than 10%. The same condition was there in the gold. Same condition is here also. Silver ETF, they shall be benchmarked against the prices of the spot silver. स्पॉट सिल्वर की जो भी प्राइस आपकी चल रही हो, स्पॉट सिल्वर कॉन्ट्रैक्ट की जो भी प्राइस चल रही हो आपके एक्सचेंज में, the same index is going to be tracked by the silver ETF, and physical silver obviously will be stored with the vault. Actively managed ETF means they are the ETFs for which FME has the discretion over the composition of the portfolio. They shall disclose in offer document and all advertising material that is an actively managed ETF. That means where you want to invest, what kind of securities you want to invest, for that FME has a discretion. It can invest on its own. Next is market makers. Market makers, we know that these are the brokers, these are the middle persons who provides the two-way code, buying code, selling code, like that. Fine. Computation of the NAV, FME shall compute the NAV of ETF on a daily basis, and because obviously the exchange, the trading is happening on daily basis and you have to track it on daily basis, publish the same on the website and inform the same to the recognized agencies. And if some investors wants to redeem it, the investors other than the market makers, they can approach directly to the FME that we want to take our funds back, and you are not to not apply an exit load. Exit load means if you want to go out from the scheme, normally an exit load is applied, but that exit load will not apply in these following cases. What are the following cases? अगर आपका traded price is at discount of more than 5% of NAV for continuous 30 days, right? The NAV that you are calculating and the traded price, there is a difference of more than 5% for a continuous period of 30 days. So investor can choose to go out and you will not impose any fees. No quotes are available on the recognized stock exchange. Total bid side on the recognized exchange is less than higher of 1% of total units or $2500 in value in the 7 consecutive trading days. People are not coming to buy your securities. Like in the 7 days, your bid prices are bid sizes are too low. So in all these cases, you can investor can take back their money. So this is it that we wanted to understand in this particular document. Now we are left with more than half of document, but that is super easy. So we are going to cover that in our next lecture. Oh, this is it for this particular lecture. I hope you did understand the lecture. Thank you so much for watching.